Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is The Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and it is a big week for inflation data. Tomorrow we're going to get the Consumer Price Index data at 8:30 a.m. Eastern Time. Thursday, we get the Producer Price Index, the PPI, if you will. That comes out at 8:30 Eastern Time as well. Some other economic data coming out this week, too. We also have retail sales on Thursday. We've got consumer sentiment on Friday. And every Thursday we do have jobless claims. So nice full week of economic data, even though earnings season is pretty much wrapped up at this point. I believe 97% or 98% of U.S. companies in the S&P 500 have now reported their earnings. So there's not much left to go on that front. But still some critical economic data, and none more important than the inflation rate that is going to be reported on Tuesday. Mike, what are expectations here?
I was going to say, I think we actually do have one more piece of more important information than everything that you listed, which is today's our first live day in Portland, Maine as well. So welcome to all of our Maine listeners for the first time ever here on the Financial Exchange tuning in on WGAN. So appreciate that as well. So back to what you asked about, though, in terms of Consumer Price Index, which we will receive tomorrow. Expectations are for another increase similar to what we saw last time, which is higher than the previous few months. The median forecast that I'm seeing for CPI is coming in at 0.4% month over month. Still a relatively muted 3.1% year over year, and for core a 0.3% increase. In terms of the previous month, you saw a 0.3% increase on total CPI, 0.4% on core. And so the question is, will you have this surprise to one way or another? And the bigger question being, will this continue to build upon itself? Because we saw a nice cooling off of inflation towards the end of last year and through January data for the month of December. Bit of a reversal when you saw the data for January. We need to see, does that reversal continue tomorrow when we get the Consumer Price Index data?
Yeah, I got to say, so when we look at let's look at headline CPI first, just to see what we're seeing on that front. So headline, remember, does include everything: food, fuel, all the stuff that is included in a household budget. And here's the interesting piece on headline CPI is the data that we're going to be getting this week is for February. Last February, this one's going to fall off the annual calculation. It came in at 0.38. So anything less than 0.38 is going to make the annual CPI number look better. Anything worse is going to make it look worse. What we then get into is this period where March, April, May, June, here's what we went, and I'll include July as well. 0.08%, 0.43, 0.11, 0.21, 0.21. So aside from April that came in at 0.43, everything else was at or below, kind of that 2.5% range that, we'd like to see. I know the Fed's got this 2% target, but it's, again, I think as long as
reasonable, folks.
I think as long as the number has a 2 in front of it, they'll be happy with it if it's 2.5 instead of 2.1. So here's what we do end up with is, 4 out of the next 5 data points that are coming are, if you end up printing 0.3, headline CPI is going to start increasing annually during that time period. And here's what we've done for, the last couple months now is 0.23 and 0.31. So if you get another one at, 0.3 or 0.4, it's like, okay, now you got a 3-month trend where you're probably, showing some increases if those continue over the next few months here. We then go and take a look at the core CPI and the month-over-month numbers there. And again, just kind of what we're going to be lapping year over year. And here's what's coming up. So February last year printed 0.47. You're probably coming in below that. If you don't, then you've got,
problems.
Real danger Will Robinson signs flashing everywhere. If you get past that, then you got 0.32, 0.47, 0.36, 0.19, 0.23. So you got some chance. Unlike the headline number, core CPI, as long as you print like 0.3 and nothing too high, you're ending up with that number decreasing on the year-over-year one, even though you're still running at a hotter pace than you'd like. But ultimately, here's the problem that we get to is if you really want to print in that 2% range, you got to be showing like 0.15 to 0.2 ultimately. And the U.S. economy has not consistently done that since before the pandemic. It just has not. You have not seen that for any extended period of time. Like, yes, in April of 2020, you saw the CPI fall by 0.43, but the world was kind of messed up in April 2020. So I don't really think you can, again, it's also 1 month, so who cares? So the facts are not yet in evidence on either headline or on core that you have any consistent ability to get inflation to that 2% target. You've been getting better. There's no doubt about it. I'm not meaning to poo-poo this because what we have seen has been an improvement. But there's another level that we need to get to in terms of, how slowly prices are rising and how slowly we want them to rise. And the facts are not in evidence that we are there yet. And there still is work to be done. And this is why it's all the more perplexing to me that Jay Powell last week on Thursday in front of Congress says, yeah, we'll probably start cutting interest rates before inflation gets to 2%. And on one level, I can understand it because the idea is, hey, if you've got these lags built in and inflation keeps trending down, okay, we'll get there and so we can afford to cut. But the other piece, Mark Fandetti and I talked about this, it's kind of like, hey, man, you got unemployment running under 4%. Why do you need to cut interest rates right now? Because you got this dual mandate, which is full employment and stable prices. By any metric you can look at, you've basically got full employment. Why not finish off the stable prices piece before you start worrying about too much job loss?
And we've pointed out that other times this Fed seems to care a little bit too much about what equity markets think. Equity markets are near all-time highs, right? Like there just does not seem to be that reasoning.
Not near all-time highs, Mike. Last week we were hitting all-time highs.
Right? Yeah, we just traded down from them very recently, and so. Yeah, I'm with you in terms of the Fed speaking the way that it's speaking right now. I don't know what the incentive is for them. I know they don't want to be seen pushing this decision off to the fall of this year for obvious reasons, election time. They don't want to be making decisions right into an election and be perceived as politically biased. But, yeah, tough to justify even talking about this right now when you've got data points that are, again, contradicting the narrative that was formed at the end of last year, I guess, would be the worst way that I can talk about this. This is not catastrophic inflation. This is not a complete swing in the opposite direction. The labor market hasn't taken a swing to be dramatically tighter than it was previously. It's just still too tight in apparently both of our opinions to start cutting interest rates or even mentioning the cut of interest rates in the future.
So that's where we stand at the moment when it comes to interest rates and inflation. Let's take a quick break here. And when we come back, something that we do need to talk about, which is, look, you had one of the fastest paces of rate hikes in recorded history in the United States in 2022 and 23. I mean, interest rates rose about 5% in the span of less than 18 months. And a lot of people said, hey, that's going to break the economy. A lot of smart people, too. Jamie Dimon, who runs J.P. Morgan, Ray Dalio, who runs the hedge fund Bridgewater Associates. These are people who have made billions of dollars by being right more often than they are wrong about markets and the economy. So the question that is raised, not begged, is, hey, why were some of the smartest people in the room completely wrong about what the rise in interest rates would do to the economy? Or are they actually wrong? We'll talk about that when we come back.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zodda from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
Mike, so in the last couple of years, we've seen some changes in interest rates. In March of 2022, prior to the mid-March Fed meeting, the effective Fed funds rate was less than 0.25%. And by July, the end of July of last year, it was up to 5.3. So in a span of about 18 months, we saw the Fed funds rate rise by 5.25%, which is one of the fastest paces of rate hikes that we have seen historically. It's not that we haven't seen, 5% run-ups, but outside of a couple very brief periods in the late 1970s and early 1980s, you simply have not seen any movement anywhere near this pace. Now, the second part of this is that when you look at the data at surrounding those very rapid rate increases, one of them was in there was one in the 1970s, like 69, 70, and that abruptly led to a recession in 1970. The second one was in 1973 in response to one of the oil price shocks, and that ended up with the U.S. economy going into recession. The third one was in 1980, and then a subsequent one in 1981. Both of those threw the U.S. economy into recession. So you've got 4 instances in recorded history where the Fed funds rate has risen as quickly as it has prior to this year. And in each of those 4, the U.S. economy went into recession. And fairly quickly afterwards. It's not something where it's like, hey, 120 months later, the U.S. economy entered recession. It was, no, about 6 to 12 months after rates hit their peak, the U.S. economy was in recession. Now, rates hit their peak here in July of last year, so if you do the math, we're about 8 months out. I look at the data that's out there, and recessionary concerns in the next, 4 months are pretty low on my list. It's a possibility, but it's a very remote possibility. I'd put, the possibility of a recession in the next 4 months at like maybe 5 to 10% at most. And so the question that's out here is you had some very, very smart people, namely, as named in this Wall Street Journal piece, Jamie Dimon, CEO of JP Morgan, and Ray Dalio, the CEO of Bridgewater Associates, one of the most successful hedge funds in history, both said that there was, a real problem coming by, end of 2022, and they've got some egg on their face. Is this just a case where, hey, everyone in markets is wrong sometimes? But the counterpoint is, look, these are usually pretty measured people, and Jamie Dimon said that a hurricane was coming to the U.S., and I don't think he was talking about an actual hurricane because he's not a meteorologist.
Yeah, and now I think he has acknowledged that he was wrong about that, which is, important, but in reading through this, a spokesman for Jamie Dimon and JP Morgan said that JP Morgan chief gives a range of possibilities and weighs them, but does not make predictions. That was a statement from Jamie Dimon's office. May I read the quote that he said back in 2022? Because this sure sounded like a prediction to me at the time.
I was there.
I said there's storm clouds, but I'm going to change it. It's a hurricane. He goes on to say, nobody knows if the hurricane is a minor one or Superstorm Sandy. You'd better brace yourself. JP Morgan is bracing ourselves, and we're going to be very conservative with our balance sheet. Which part of that is not a prediction? I guess you didn't put any timeline on it, so that would be the only piece there where I could say you were sufficiently vague. But, geez, it sure does feel like a prediction and sound like a prediction. I'll be the first to say, going into 2023, big market rally and reversal of fortunes was not on my bingo card, right? There are plenty of people, myself included, who thought that recession was a very plausible scenario here. And so I'm not necessarily faulting Jamie Dimon for his prediction. I would say, though, don't walk it back and say the CEO doesn't make predictions. This was as close to a prediction as you can get here, and it just turned out to be wrong. People are wrong all the time.
Now, I do also love that this piece from the Wall Street Journal, I'm just going to read a quote here. High-profile investors and economists such as DoubleLine's Jeffrey Gundlach and Rosenberg Research's David Rosenberg were just as fearful. So this is something where it's important to understand the context of who's being spoken about. And look, if you don't follow markets that closely, you can be forgiven. If you don't follow anything that closely, you don't understand kind of the personalities behind what's being said, and it is important to know that. David Rosenberg, as an example, has been predicting recession since 2009. David Rosenberg in 2016, 17, 18, 19, when the U.S. economy was as good as it's been in the last 25 years, was saying that there's a recession coming.
He was essentially right.
David Rosenberg's opinion on recessions, he is the economist who cried recession. And so when it comes to, hey, is there any signal to that noise? The answer with Rosenberg is no. You can't tell when he actually is serious because he's always predicting recession. And someone who's always predicting recession is as useless as someone who's saying that there's never going to be one. On the other hand, when you have someone like Jamie Dimon, who the entire bread and butter of his brand and how he became who he is through risk management and being able to be right when other people are wrong about, risks coming.
He's also the only CEO of a major bank who has been through the 2008 recession and the Great Recession of 2008. He's the only one at a big bank that's still there.
Yes. When he says something, your ears perk up and you're like, oh, what does he know that I don't? Because historically there's been better signal to noise with someone like that. Ray Dalio is, less. Ray Dalio makes a lot of predictions, quite honestly. Some of them come true, some of them don't. And that's just par for the course when you are a hedge fund investor. You're just not right all the time because that's how it is. And that's the game, is you make a lot of bets and you hope that you win on 55% of them. And if you do and you manage your risk well, you're one of the best hedge fund managers of all time. So I think that part of this is understanding the context of the different voices and how they typically message things, because someone like Rosenberg saying, oh, like a recession's coming. Well, dude, back in 2017 you said one was coming too, and didn't really happen, man. On the other hand, you get someone like Dimon saying this and you say, oh, like this is not someone who normally gets dramatic about markets.
Right.
This is someone who I kind of like in Dimon. He's like the Chuck Yeager of markets. Yeager was famous as a test pilot for, his plane would be on fire going 8 times the speed of sound. He'd be like, yep, everything's fine, man. And that's kind of how Dimon's been through most of his career. So when you hear there's a hurricane coming, you're like, oh, I better listen to this. And it's important. I think the main thing that I'll take from this is understand who you are listening to and where their biases are and their expectations of how things are going to go, and also how they communicate, because doing that is half the battle in trying to understand what people are telling you about markets.
And don't let one opinion completely change your allocation or your
they're not geniuses.
Because you know what, I guarantee you that Jamie Dimon, in spite of his concerns about the market, did not instruct all of J.P. Morgan's assets to prepare for a recession, right? They didn't take everything out of equities and just say, hey, we're going long treasuries because of all of this. So, just understand the I guess, context in which you're reading some of this stuff.
Yeah, even really smart people can be wrong. And in financial markets and the economy, they are wrong a lot because these are really complex systems and you're just not right all the time. Let's take a quick break. When we come back, we got Wall Street Watch after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi folks, Susan Powers and Chuck Zodda here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, why is it important to build a financial plan?
Well, I think it's something that can give you some important guidelines as far as what you should be doing on a daily, weekly, and monthly basis in order to be able to hit those goals, and whether those goals are saving $100 into an emergency fund or trying to save thousands of dollars for a college education that may be coming in 15 years, you still need to have a plan for how to execute that on a daily basis in order to get wherever you want to be going.
So we know how fluid life can be, Chuck. What happens if you need to change your plan because your circumstances change?
Well, I think this is one of the most important things, is that a plan is just an initial guide for what you should be doing, but if things do change, you have to adapt that plan as well. So let's go back to what I was previously talking about with saving for college. If the picture for how expensive college is going to be in the future changes because of changes to student loans or things along those lines, you might say that you need to adapt your plan and change your saving strategy, and that's perfectly fine to do if the reasons, for doing so make sense and if the picture is different from when you initially started building that plan.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in negative territory to begin the week as Wall Street eagerly awaits tomorrow morning's all-important consumer price index for the latest reading on inflation. Right now, the Dow is off by 0.5%, S&P 500 down over 1/3%, and the NASDAQ down by 29 points. Russell 2000 is off by 0.75%. 10-year Treasury yield is flat at 4.09%, and crude oil down 1.33%, trading just below $77 a barrel. Shares in crypto exchange Coinbase jumping another 4% this morning as Bitcoin notched another record high, now trading above $72,000. Meanwhile, Choice Hotels International said it would abandon its $7 billion bid for competitor Wyndham Hotels and Resorts after being rebuffed. Wyndham stock down by 1/3%, while Choice shares are up by 4%. Elsewhere, New York Community Bancorp stock down another 3% today after plunging over 6% on Friday following a $1 billion capital raise last week. Oppenheimer hiked its price target of Netflix, calling for about a 20% upside going forward, saying the streaming giant's dominance will continue given its clear advantage in producing high engagement content. Netflix shares up by about 0.25%. Social media forum Reddit said it is seeking to raise up to $748 million in its initial public offering, targeting a valuation of up to $6.4 billion. The company set a price range of between $31 and $34 per share for its IPO. It will trade under the ticker RDDT. And after today's closing bell, we'll see fourth quarter results from Oracle. I'm Tucker Silva, and that's Wall Street Watch.
Mike, there's a piece in the Journal of Wall Street today. It isn't just big tech propelling gains in the stock market anymore. A broader group of companies has fueled the recent climb to records. And it's true, we have seen a broadening of the market in recent months where, yes, you still have had this phenomenon where what's been described as the Magnificent Seven have driven markets forward. The Magnificent Seven, of course, being none other than Microsoft, NVIDIA, Apple, Google, Meta, Amazon, and Tesla. But the Mag 7 is kind of, well, it's not really the Mag 7 recently. If you look at what we're seeing year to date, just as an example, it's basically become the Mag 3. Amazon's up 10%, Meta's up 28%, and NVIDIA's up 39%. That's through Friday. Whereas you look at, what you're seeing from the other ones, Microsoft's up 7%, but basically flat in the last few weeks. Apple's down 10% year to date. Google's down 1% year to date, and Tesla's down 27% year to date. So
I mean, if you had just told
it hasn't
me,
been the
sorry.
No, go.
I was going to say, if you had just told me that Apple and Tesla were down 8 and 29% for the year, or 10 and 27, whatever the number was you quoted, if that was all the context I had, I wouldn't exactly say that this is a strong market for 2024. But as you mentioned, you've seen a broadening here. I believe 1/5 of S&P 500 companies are reaching 52-week highs right now. And, this was I think the narrative that a lot of people were playing last year, which is, hey, the stock market's expensive, but that's being driven by 7 companies, and there are actually a lot of other companies in the S&P that look relatively attractive at the moment.
And actually, I was giving some of the wrong numbers. I wasn't looking at full year to date. NVIDIA's actually up 75% year to date. Meta's up 35%, and Amazon up 13%. So, just a nice little 75%. The other thing on NVIDIA, Mike, did you know? I didn't know this until today when one of my favorite follows, Brent Donnelly, put this out. Did you know that there is an ETF that allows you 2x leverage to NVIDIA now?
Oh, I've heard about these single stock ETFs.
With leverage.
Yeah, that's... Should we take a step back and kind of explain what that means for a moment?
Yes. So here's the premise of this, and I'll tell you why this is what I have been calling max stupid, which is basically max stupid is the point that you get to in every bull market that turns into a bubble where people just do the dumbest stuff ever, and it works for a very short period of time, and then the whole thing blows up just because it's not viable. So something that is a 2x levered product, basically what it does is it uses some combination of either options, futures, or swap agreements. I won't get too technical on it, to try to replicate twice the daily performance of an underlying holding. So in the case of NVIDIA, as an example, what this tries to do is, hey, if NVIDIA is up 2% today, it wants to be up 4%. Like, that's the goal of this. On a day where it's down 5%, it would subsequently be down 10%. Now, these are not things that actually track the performance in the long run, because if you're doing a 2x leverage, it's something where, remember, if you lose 10% and then gain 10, you're not actually back to where you started. You're a little bit worse off. Likewise, if you lose 20 and then gain 20, you're more worse off. So these products don't track the actual underlying in the long run. They're basically meant for very short-term speculation over periods of days is the best way that I can phrase it. So when we look at this NVIDIA 2x levered ETF, this product launched a year and a half ago in December of 22 and basically had no activity for the first year of its life. It got up to $200 million in assets. Since the start of this year, it's gone from having $200 million in assets to $1.4 billion.
Okay.
$1.4 billion.
Yeah.
In something that tries to replicate 2x the performance of one of the most volatile, if not the most volatile stocks in the market today. This is max stupid. This is as dumb as it gets. Not because, you can't make money on this. I'm sure there are some people who have made money on this. But it is so highly volatile in a name that is already volatile to begin with that when you see $1.4 billion in something like this, it's hard to imagine how it can get much dumber. And that's usually where things start to get, the localized bubbles start to pop a little bit. Does this turn into, hey, does the whole index fall apart? Not necessarily, because if this article from the Wall Street Journal is to be believed, and in fact it is true, which, again, this is what we've been seeing, in the last few months you've started to see a broader rally that's been, carrying markets, not just narrow top leadership. And so if that leadership does falter and you've got a broader rally that's happening, it can be something where, look, your index can tread water as everything else rallies, and maybe this just falls apart. But the problem that you run into is this idea of leverage, which if everyone starts betting on, leverage this and leverage that in very narrow areas, you can see an awful lot of capital lost. And in the hedge fund world, as an example, let's say that you are levered to NVIDIA because it's been the best trade for you over the last year or two. You then have to go through a process where you say, okay, now I got to, my NVIDIA's, falling apart. I got to, my manager's tapping me on the shoulder saying I got to pull back some other things in my book so I'm not taking too much risk. And you get a degrossing that happens even without, problems being, apparent somewhere else in the market, just because from a risk management perspective, you got a little too far ahead of yourself. So this is the kind of stuff where you talk about how stupid can markets get. I think we're pretty darn close to it, Mike. I think we're close right now.
Yeah, that's concerning.
To max stupid.
Yeah. Some of the signs are there.
Another one.
It's tough to compare max stupid, but go ahead.
Another one from Bloomberg. So, back in 2018, Mike, do you remember Volmageddon?
No, actually.
Okay.
It's been like 5 years, so.
It's a 6, actually, if my math is correct.
Yeah.
So, Volmageddon, it's a combination, it's a portmanteau, if you will, of the words volatility and Armageddon. And the basic premise is that back in 2018, a bunch of people were betting that the market was going to continue its run from 2017, which was the statistically calmest year in markets in history. Not most boring, but calmest, meaning markets pretty much went in one direction, and that direction was up. There was almost no volatility. And so what you had a bunch of people doing, whether it was through ETFs or directly through options, was basically betting that that low volatility would continue. In February of 2018, we got a little bit of volatility, and it absolutely blew up a few parts of the market. And all these people that had been, I don't want to get too technical on it because it's just not worth it, but basically people that had been betting that low volatility would continue ended up seeing large fortunes wiped out using volatility products that were betting that that low volatility was going to continue. And what we're seeing right now is these short volatility trades, betting on low volatility. You're starting to see a lot more in assets moving in this direction, and it's got some people nervous for good reasons, because when these trades do blow up, they are the kind that tend to take a lot of capital with them.
And drag markets with them sometimes too.
So you've got this combination of people piling into levered bets on things that have been going parabolic up, which, if there's one thing I know about things that go parabolic up, they tend to go parabolic down on the backside. And the other piece is that you've got people betting that there won't be significant volatility at the same time. It's a fragile market. It's not one that, it's not one where you say, okay, does this have to blow up tomorrow? It could, and it doesn't mean that the thing goes down 50%. I'm not saying that. But this has been a market that's rallied 25% in a span of 5 months with no real pullback. Markets tend to have volatility and pullbacks from time to time. Wouldn't be surprising if you got one in the next, couple months or so, because they're part of a healthy, functioning market, is washing out, over speculation towards areas that don't deserve it.
and that's an important piece that you just mentioned there, Chuck. Wouldn't be surprised if it happened in the next few months. You should never be surprised if some market volatility happens in the next few months. Maybe it's elevated now because of where market valuations are and where things have gone recently, but that's a feature of the markets is they have these periods of time where they get a little bit crazy. They have other periods of time where they get crazy to the downside as well.
Let's take a quick break here. When we come back, we'll talk about why it is so darn expensive to go out to eat these days.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zodda from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Mike, let's talk a little bit about restaurants. One of the big trends that we have been seeing is that the cost of eating out at restaurants has been going up meaningfully. Even after accounting for inflation, though, people are still spending more money on restaurants. So this is not something where you are seeing high prices scaring people off. It's more just high prices are causing people to post those high prices on Twitter or other social networks after they spend money at restaurants.
Yeah, it seems to be getting that type of attention right now. We covered, was the Five Guys story on Friday of last week?
Yes.
Where, the bill was apparently higher than somebody anticipated. According to the Department of Agriculture, though, just putting this into real figures, spending on food took up more than 11% of incomes in 2022. If that doesn't sound big, what you should know is that's the highest level in 30 years. That's not just dining out, that's groceries, that's everything else as well. But this has eaten up a larger portion of American household budgets. And in my view, this kind of has a similar impact as gasoline, right? It's front and center. You can't exactly avoid going to the grocery store. And so this is one of those impacts that I don't think it's quite as severe as the gas station when you drive by it and you might not even be filling up. It's tough to really see the food price changes until you ring everything up at the cash register and just notice that, my grocery bill is 40% higher than it was from a few years ago. But it definitely plays into the American psyche quite a bit.
It does. The other piece that I will point out, and this is just, because it's important to cover the full data series, when you mention that, yes, this is the highest, percentage of budget of an American's budget that food has taken up in 30 years, that is true. But also when you go back to the 50s and 60s, the overall amount was far higher. Food has been getting consistently cheaper over the last 70 years. And yes, there's been a short-term bucking of that trend, but that trend is in place not because of the policy of Congress or, one president or this and that. That trend is in place because we've had significant improvements in the technology available for farming and producing the food that we eat. And I would not expect those trends to be bucked because of a short-term hiccup here. So I'm not saying that, you should be comfortable and say, there's no problem. What I am saying is I expect that this problem will be relatively short-lived because we're going to find more ways to produce cheaper food because that's been what we've been doing for the last 80 years.
Hey, is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? Well, you can experience that right now by booking your next vacation in the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way, and if you head to visitusvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Mike, another piece in the Wall Street Journal talking about surge pricing coming to more menus, which to me is just I just don't understand how restaurants think this is going to be a thing that makes people happy with them. In fact, if a restaurant that I went to started using surge pricing, it just makes me wonder all the time, am I actually getting the right price for this food? As an example, there's a restaurant in San Diego called Cali BBQ, which, listen, if there's one thing that San Diego's known for, it's great barbecue, obviously. Yeah. I mean, it's just...
That's why I go to San Diego.
It's got to be fantastic.
Not their tacos.
Go
for the barbecue.
Right up there with Kansas City,
Oh, yeah, you put it up there with Kansas City and Austin, Texas, and places like that. It's the holy trinity of barbecue when you put San Diego in there. So... they're saying that the variable pricing attached to the online pulled pork sandwich boosted the 4-unit chain's $30,000 in monthly delivery sales by $1,500 since they began testing it. Great, so you made more money while providing nothing of additional service to individuals. That sucks.
See, I'm not there. I'm not in love with this strategy of it, and I think that it does lead to confusion.
This is
and
the
anger.
opposite of productivity. This is literally, we're making the same stuff and just finding ways to get more money out of it.
Why are you so much angrier about it here than with airlines or with Uber?
I already say that airlines and Uber suck.
Okay, fair enough. So
I'm
restaurants
very
suck
consistent
too.
on this on this point. If you're not doing something to actually improve the product, stop charging me more.
So here's where I think this makes a ton of sense for restaurants. You have, let's say, a big dine-in business and a big order-out business. If you have the ability to surge price your delivery orders when you're trying to service your dine-in customers at the same time, I would be utilizing this all the time. I'm not saying it doesn't suck. I'm not saying it's not annoying and frustrating, but I can see why restaurants would want to use it, and I think there are some circumstances that are dumber than others. The one in Cali Barbecue is one that I tend to think is pretty dumb. But, if I'm operating an Italian restaurant where I'm trying to get tables filled and moved and wine served, I'm going to do everything I can to discourage takeout orders.
Then just shut them down.
Yeah, hear you.
Don't make the price, don't make me wonder if I'm getting a deal or not.
Yeah.
The price is the price.
Yeah, I'd be doing
Take it or leave it.
I hear you.
Quick break here. Hour 2 is next on the Financial Exchange.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing and Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with a trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing and Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699, or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
With the stock market remaining volatile, it couldn't be more important to have a sound financial plan. I'm Mike Armstrong from the Armstrong Advisory Group. There are risks with any investment strategy, and that's why we've written a brand new guide to help you understand those risks and how they can be associated with any financial decision. It's called Building a Financial Plan, and it may help you recognize the potential risks and rewards that are associated with your investment strategy, in addition to offering insight into how to research making the decisions that are best suited for you and your family. The guide also provides information on how to establish clear financial goals and what steps might be needed in order to achieve them. Call us today at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you today. And as we take a look around markets, we got a very mild downward drift happening today. The Dow's off about 100 points, or 0.25%. S&P 500's down 10 points, less than 0.25%. And the Nasdaq's down 9 points, which is less than 0.1%. So not much movement on that front. 10-year U.S. Treasury is up 1 basis point to 4.1%. Oil, West Texas Intermediate, down 67 cents a barrel to 77.34 at the moment. Gas prices nationally, after they ticked up to $3.40 a gallon nationally at the end of last week, we're now down 0.3 cents from then to $3.39 7/10. So, again, maybe a little bit of plateauing in gas prices after a recent run-up. We've got gold up $2.40 an ounce to $21.87 90. And those are your major markets that are moving. Reminder that tomorrow we do have the data coming out for CPI at 8:30 a.m. Expectations are for the headline rate to rise 0.4% for the month and core to rise 0.3% for the month. So we'll see where we end up clocking in at 8:30 tomorrow morning. Top story for this hour, a Wall Street Journal exclusive. Justice Department opens probe, interviews crew in Alaska Airlines blowout. So this is not the NTSB that is, doing their own, study, which they always do whenever there's any kind of air travel incident that happens, even if no one is killed. This, I'll quote here, the Justice Department has opened a criminal investigation into the Boeing 737 MAX blowout on an Alaska Airlines flight, according to documents and people familiar with the matter. Reminder, this doesn't mean that anyone is guilty. It doesn't mean that anything is going to come of this. I don't know that anything necessarily does. I don't know that, what happened necessarily rises to the level of criminality. But the Justice Department is at least looking into this, which I will say, good. This is a company that has had all kinds of problems with quality control, and if there is, something that needs to be looked at, I'm glad that you do have the Justice Department saying, hey, is there a larger problem here where there is something criminal going on? And I think that that is warranted, and I have no idea how this will turn out, but it should be looked at because this is kind of a pattern with Boeing recently.
Yeah. Just don't expect it to fix any of the problems. After 2018, 2019, the Justice Department and FBI teamed up to investigate. They, levied them, or they ended up resulting in a $2.5 billion settlement in 2021. They also tried to prosecute they did prosecute a former Boeing pilot. The jury acquitted him back in 2022. But, and then here we are facing these problems again. So this is not surprising. It's par for the course that the Justice Department, FBI would be investigating this and trying to figure it out. Perhaps they do bring criminal charges. Probably an uphill battle on that if they do, based on recent history. But yeah, this is kind of par for the course. And there's another piece from the Journal about the actual processes behind manufacturing and an explanation as to how this type of thing happens at Boeing. I don't find it terribly. The general explanation is that because of delays in parts of the manufacturing process, Boeing very frequently ends up changing the order in which they assemble aircrafts and, brings them back to other parts before actually finishing things. That happened in the case of the blown out door, it appears. Every story that I read about Boeing and their manufacturing process just makes it, I don't know, digs a deeper and deeper grave, right? I was thinking of the analogy of like an onion here that it might be rotten, and you peel away the top layer expecting the rest of it to be fine, and just the deeper you go, the more and more rot I feel like you find at Boeing.
Well, this would be like, and look, I've never built an airplane aside from the models that I built with my dad when I was a kid, so my experience is limited. And I've never built a house from scratch either, but I know a number of people who are builders, so I know the general premise of how you do it. You don't wake up one day and say, hey, you know what? Can't get the lumber. Can't get the lumber. Why don't we just run the plumbing first? Well, no, like you don't do that. It doesn't really work like that. You got to frame the house first, and no, you know what? Let's just run the plumbing and then come back to the framing. Well, I don't think that's a good idea. No. With an airplane, it would strike me that you should maybe have one backup part of each at least just lying around the factory, just so that, hey, in case there's a delay in your shipment, okay, great, we can figure this out and build it in the right order, as opposed to, hey, you know what? We're missing, we don't have the bolts that we needed for the door. Okay, let's come back to it. We'll do the door later. What? No, I mean,
finish
this
the door
sound
before
unreasonable.
It goes next.
And look, I know it's a little bit expensive to have an extra one of everything lying around, and I know that you got to carry that inventory, and it doesn't make you any money. And I know that the bean counters are like, no, we can't. But maybe that would prevent you from forgetting to put the door plugs in after you build the plane, because the plane needs some door plugs so that it doesn't, pop out in the middle of the flight.
That'd be nice.
I've said this before. What bothers me so much here is that Boeing, quite literally, was the gold standard for worldwide aviation manufacturing through the 1990s. And to see it turned into just a complete dumpster fire in the name of profit, it's shameful. And quite literally, people have died because of it. People have died because of it. And, I mean, if that didn't get them to change it, what will? Like, you had 346 people die because of the MCAS failures. And that didn't get them to change anything.
Still rolling out faulty airplanes.
It's just there is not a serious culture of safety. And the other thing that I keep coming back to on this also is, you've got a company now where its stock price has not moved. Okay, like I know it went up and down and everything, but it's trading at the same place it was at in June of 17. It's been 7 years, and if you held the stock that time, it hasn't moved. There's no dividend anymore. The dividend's gone. And so what I continue to just find baffling here is, how is there not activist management coming in and saying, or activist investors coming in saying, guys, this is a dumpster fire. The stock has returned 0% on a price return basis in the last 7 years. How is the C-suite and the board of directors still intact?
We asked this question a few weeks ago, like, how has an activist investor not come in here and demand changes? And I think the only answer that I come to is that nobody has an answer. Nobody has an answer as to how to fix it.
No one knows how to build airplanes. You look at Disney, it's like, okay, we'll do like some shows about tennis or whatever. Hey, this one will be, with a focus on swearing. Okay, like everyone thinks they have ideas on how to fix content. No one knows how to build airplanes, myself included.
And the typical
but
tools
I know that
might
it's
not
not like
here.
this.
Do you want to break up Boeing and sell it for its parts? Well, no, because it's this national security interest that you can't really do that to. It is an incredibly complex problem, which I think is the only answer that I have as to why somebody hasn't jumped on here and said, hey, we need to make these changes to this company.
Now, the other thing that I will say, this is not a problem that is unique to Boeing. Did you happen to catch any of the troubles that United had on their flights over the last 5 days?
No.
So they had one plane with a hydraulic failure, one plane with an engine failure, one had one was the wheel that fell off, the tire that fell off.
Oh, I did see
they
that.
Had
Yep.
5 or 6, fairly significant things all coming out of their San Francisco hub. And I have a buddy who works for a competing airline, and he basically said, look, this is how it is with all of the airlines. They all run, as tight as they can on, maintenance and everything. It's why Southwest had their big operational failure because of, weather in and around Texas a couple of years ago. He's like, that could have been any of our airlines. It just happened to hit their hubs. Same thing with, United and these problems. It's not a Boeing thing or an Airbus thing because you had both Boeing and Airbus planes that, had issues. It was a maintenance thing, and it's just we're just so up against it and trying to wring out every last bit of efficiency. And look, in the airline business, you have to because it's such a low-margin business where if you can eke out 4% profit margins, you're like, hey, we're doing pretty good. And so if you can, get an extra 0.5% by, squeezing a little bit more out of the plane, you're like, oh, like this is, we're doing great. But man, it just feels like we're getting pretty darn close on a lot of this stuff to some really bad things happening, and we're being held up now by the fact that these planes in general, aside from these couple manufacturing issues, are really well designed to keep people safe. But it doesn't feel great right now, I'll be honest. And I'm someone who's normally I am like the champion of modern aviation. I still think it's great. Even if my flight's delayed 6 hours, I'm like, I can go 3,000 miles with a 100% chance of success, and the worst thing I have to worry about is missing lunch. I think that's cool, and I'm starting to feel a little not great about where the national aviation industry is. And if you've lost me, that's a problem.
Can I give you some exciting news that has nothing to do with this then? But is somewhat quasi-aviation related?
Yeah.
The U.S. military lifted the grounding order on all V-22 Ospreys.
That's cool.
They've been grounded for the last 3 months.
I thought you were going to talk about Hawaiian Airlines rolling out their new interiors for the direct nonstop flights from Boston to Hawaii.
Ooh. No. I didn't see that.
Brand spanking new. They look very snazzy. They've even got some little Hawaiian touches inside. It's very nice.
If we have to talk about it, we probably can't afford it.
I would concur. Yeah. And a 13-hour flight just is not great. Not great, but hey, it's better than 2 7-hour flights.
I think it's impressive as heck that there's nonstop flights from Boston, Honolulu, or wherever those things go. That's amazing.
I agree. Let's take a quick break. When we come back, let's do some trivia, and then we'll talk suburbs after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi folks, Susan Powers and Chuck Zodda here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, when it comes to building a comprehensive financial plan, what components should you include?
Well, I think you have to look at all of the big ticket items to make sure that you're accounting for them. So things like, do you want to retire and what's the timeline on which you want to retire? What's your plan for housing? Are you planning on renting and just allocating a portion of your income on a monthly basis to rent? Or do you want to be buying a place and that needs to be one of the goals that you integrate into your plan? Other things might depend on whether or not you have children, like saving for educational expenses or things like that. And then obviously, you might have other things that pop up along the way as well. Smaller things. Hey, do you need to save for a vacation next year? Or things along those lines.
So what's the best way, Chuck, to go about defining your goals?
Well, I think you really need to think about what's actually important to you in terms of how you want to live your life. It's not so much a financial discussion at first, but more thinking about what you actually want to do with your life. So if you say, look, I'd love to spend my time down in Florida more often, okay, that can get you thinking about whether you need to rent a place down there, buy a place, or some combination depending on what your life circumstances look like. So I think that's a great place to be starting.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only. Well, last night, Robert Downey Jr. won his first Academy Award in a 40-plus year career, where he won the Best Supporting Oscar for his role, or Best Supporting Actor Oscar for his role in Oppenheimer. Trivia question today: how many times has Robert Downey Jr. been nominated for an Academy Award? Once again, how many times has Robert Downey Jr. been nominated for an Academy Award? Be the seventh person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the seventh correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mike, there is a piece in the New York Times today that is talking about duplexes, and I feel like I'm finally being heard.
They're speaking to you, Chuck.
Oh, my goodness. As someone, like, I love duplexes, and it's not because I personally want to live in one, but it's because I view them as the ultimate tool to making suburbs more dense without making it seem like they're more dense. And the premise is very simple. If you build a single-family lot, you have one property and one family who can live there. If you build a duplex, you immediately double the number of people that can live there without needing any kind of crazy high rises or giant apartment buildings or anything along those lines. And that's just great to me, because ultimately my view is that we need more housing built, but it needs to be within the overall feel and character of towns that we see. And some towns, if you are already fairly developed, okay, that's going to be 3 to 5 story apartment buildings that might have 100 units in them. Some, if you're just doing single family, hey, an easy way to double your potential building is just through allowing duplexes to be built instead of just single family. And those are things that you can do without changing the overall nature of a community.
Yeah. This article from the Times in particular is talking about a conference that goes on once a year that has apparently been drawing a little bit more bipartisan attendance. YIMBY. So we've all heard of NIMBY, not in my backyard. This is yes in my backyard, and they hold a conference annually. The most recent one was down in Austin. But if you actually think about one of the major things that would represent, it's, hey, some say it's, hey, it's pulling control of zoning rules away from local legislature, which is not exactly a conservative idea. But the fundamental piece here is deregulate, right? If you're trying to go from a conservative approach to this issue, it's, hey, we want less regulation out there that is a pretty consistent conservative value, and so it falls right into the playbook. Quite honestly, I think that just more housing is not much of a political issue in general, but everything we talk about has to get politicized one way or the other. And for the first time, apparently, this conference really brought in some pretty heavy hitters from the Republican side of things to say, yeah, this is something we need to approach and look at and frame correctly going forward.
Yeah, this is the fascinating thing, is that you're actually getting some approaches from both Democrats and Republicans on this. It's not just one side that's coming to bat here. There's something that's referenced in here called the Montana Miracle. And this was something that, again, was, if you look at Montana, Montana was one of the areas that coming out of the pandemic just saw this huge influx in people moving there because they said, oh, gee, like it's quiet, it's nice, I can work remotely, and housing prices just went through the roof. And so you've got a Republican governor there who's saying, okay, like, how do I, make this work for native, is it Montanans?
Yeah.
Montanis?
Let's go with ins.
Montanians?
Nope.
Montanans.
Yep. You had it right the first time.
Someone listening must be from there. Please, correct me because I know I'm wrong. But in any case, so you've got Montana, which is about as staunchly Republican a state as you can find. And what they ended up doing was signing what's known as the Montana Land Use Planning Act. And this is something it overrode local zoning ordinances, and it allowed for the construction of more multifamily homes and also what are known as accessory dwelling units, ADUs, that allow the construction of an apartment above a garage or, a shed in the backyard that can be fully, insulated and moved and turned into like a one-bedroom apartment that a family can rent out. So those things are now allowed without saying, hey, we're not going to, inherently just allow for, 5-story buildings, but we can make better use of the land that we have through allowing an additional unit on every property. And those are the little things that you can do to improve the housing in a community without changing the inherent nature of it. And I just think it's cool that you're starting to see this stuff pop up on both sides of the aisle because I am pro-duplex at my core. Let's take a quick break. When we come back, we got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zodda from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child. Plus, you who sold the house might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was, how many times has Robert Downey Jr. been nominated for an Academy Award? That would be 3. He was nominated for Best Actor In 1993, for his performance in Chaplin, he was nominated twice for Best Supporting Actor, once for his role in Tropic Thunder, and again this year for Oppenheimer, which he just won. Andrew out in Arizona is taking home a Financial Exchange Show t-shirt, and Andrew's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
Mike, why are more Americans treating their 401ks like ATMs?
I would love to say it's because the rules have changed and they're making it easier to do so, and it all makes sense for them to do so. But the answer is probably more closely aligned with the fact that credit card balances are at an all-time high, and inflation has been pretty darn bad. Emergency distributions, as you mentioned, hit back-to-back record highs in 2022 and 2023. Those emergency distributions, nearly 40% of those last year were apparently to avoid foreclosure. That compares with 36% in 2022. And so, once again, this seems to be just one of those plain old statistics that has to do with cost of living and where people are turning to. The tough part of this is, you can get really badly penalized for taking money out of your 401k.
Yeah.
And given the fact that we're seeing these all-time highs, I doubt that everyone's falling into the exceptions. There are these exceptions to the penalties that the IRS levies on you. They're all published right on the IRS website, and there's a ton of them. You can have birth or adoption of a child, disability, disaster recovery, domestic abuse situations, military service. But the problem is there are a lot of really complex rules here, and while it sometimes can make sense, usually these withdrawals from 401ks before you're eligible to do so were previously looked at as kind of a last resort, or one of a few last resorts to look at, and I think increasingly because of just budget problems, inflation, and automatic enrollment into 401ks where people don't necessarily notice the money going in there and sometimes get surprised by the bucket. They're being looked at more and more as a piggy bank, which can be a real problem. If you are maybe in this situation where you're looking at a pending expense or the lack of a rainy day fund and trying to figure out not only, hey, should I tap my 401k or my other retirement plan, but, should I be pulling back from funding my 401k while I, raise money for this other pending issue that's coming up. Folks at Armstrong Advisory Group would love to talk to you about that process. It is a complex one. Sometimes, like I said, it can, in fact, make sense to tap that bucket as opposed to maybe running up on a credit card or something like that. But the circumstances are few and far between. And if you have questions about those circumstances of when to tap that 401k, how to utilize it, and how to ensure that it's being set aside for what it's designed for, which is your retirement, give us a ring at 800-393-4001. Again, that's the Armstrong Advisory Group at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do you have a favorite canal?
Easily I have a top two because they're probably the only two canals that I could name would be the Suez and the Panama, but I don't think I can distinctly identify which one's my favorite.
You can't name any other canals?
I doubt it. No, actually, I cannot name a single other canal right now.
15 miles on the
canal.
Oh, Mike, both of you?
Yeah.
The Erie Canal?
Yeah.
Located in the United States, connects the Great Lakes to New York City through the Hudson River?
Yep. Like I said.
Cape Cod Canal?
Cape Cod Canal?
Oh, there you go.
There you go.
Okay, yeah. Anyways. Mike, the two that you mentioned, we got some problems there. With the Suez Canal, before you even get there, you got the Houthis in Yemen launching anything that they can get their hands on from Iran into the Red Sea, trying to hit boats. They've succeeded on a number of occasions now in hitting some boats.
Yep.
In the Panama Canal, you don't have a group of military rebels that have claimed control of a country. Instead, you have a drought, which is equally as problematic, in some cases more, because the one thing that you need in order for a canal to work is water. And now I know that people listening might say, well, gee, like, shouldn't, it's connecting two big, oceans. Shouldn't you be able to get some water there? Well, the problem with the Panama Canal, if you've ever looked at the topography of it, it goes through a giant lake in the middle. And so you can't just send a bunch of salt water into a lake because you kill the lake then, which is bad.
Everything in it. Which
is bad. Now, granted, if the drought gets bad enough and the lake dries up completely, everything dies too, but we're not there yet. It's just that there is, a horrible drought that is going on right now, and the dry season doesn't end until May, so it's kind of like, hey, hopefully we get some rain in June, is kind of what the Panama Canal people are saying. Ultimately, though, what you end up with here is that, two of the largest waterways in the world by shipping volume that make up, 18 to 20% of global trade volumes have problems that are preventing normal operation right now. And it hasn't resulted in, massive shortages in toilet paper and this and that and everything. But it is driving shipping costs up. It is making things take a little bit longer to get where they're going. And it's just another stressor in a system that is already fairly stressed at the moment.
I just do want to point out, though, that in spite of these are pretty significant stresses to the system, right? These are, as you mentioned, the two largest canals in terms of shipping volume in the world. And yet, compared to the problems during COVID in 2020, 2021, the price to ship, freight rates on routes between Asia and the United States are about a fifth of what they were during that period of time. Yeah. That's just wild to think about, right? These are fairly serious problems. You've got Houthis blowing up ships or attempting to blow up ships along the Suez. You've got many ships that cannot navigate the Panama Canal, and yet we are still so much better off than we were during the recovery from that shutdown period back in 2020. It's just kind of wild to think about and remind yourself of how bad things got at that point in time.
Another thing that I just want to say here, just that I found interesting in this Wall Street Journal piece, I'm going to quote here. The canal's operator wants to invest around $1 billion on construction and engineering projects to increase access to water reserves pending government approval. The project could take years to complete. So, again, you say, okay, $1 billion to, help retrofit the Panama Canal, and great, like we can get the water that we need there. I just look at, and again, they're not apples to apples, but I remember that when the Green Line extension was being completed in Boston, I believe the final cost ended up being $3.5 billion to run 3 miles of track at the wrong gauge.
Mm-hmm. Yep.
For the T in Boston. And so the idea that the Panama Canal can be fixed with $1 billion investment, how do we get those guys to run the T?
Well, let's see if it actually fixes the problem first.
Well, I guess that's fair, but I shouldn't have to even say it, right?
Yeah. No,
it should be something that I even joke about.
Yeah.
Let's get the guys from the Panama Canal to run the subway in Boston. It actually might not be that different.
Might be better.
I'd be curious to see how they do. Like, could we do one of those? What are the things where you switch jobs for a day or something like that?
Yeah, there's a show about that, I think.
Now, isn't that Undercover Boss, or is that something else?
Undercover Boss.
You're not really switching jobs. I guess you're switching jobs for a day. Not really.
That's like you'd pretend to be just a worker when you're the boss, right?
Correct, yeah. This is a little different when you're sending somebody from a completely different industry to a new one. But yeah.
Bring the Panama Canal Authority, bring them up here, send the MBTA folks down.
Wasn't there a family show about this where, you'd swap a wife or a husband?
Yeah, that doesn't seem like that's a good idea.
Oh, it seemed like a terrible idea, but good TV.
What are you going to do at the end of it? Oh, yes, I'd like to keep this one. Yeah.
Like this one a little better.
How does that end
seems
well for
like
anyone?
An upgrade.
It just seems like a horrible idea for a number of reasons.
Yeah.
Let's take a quick break here. When we come back, we'll do a little bit of stack roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zodda from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange, so go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you have for Stack Roulette?
Piece from the New York Times about fraudsters breaking into Social Security accounts to steal benefits. The basic premise here is that if they're able to hack into your online account in one way or another, there may be a way to divert funds either by updating your address, by putting in a new direct deposit information, and directing those payments elsewhere. While there are safeguards in place to try and prevent that, still managed to happen to some... 21,000 beneficiaries in a 5-year period that ended in May 2018 and continues to happen today. This is one of those that I just have to put the PSA out there that you simply must be vigilant. And I know so many people that reuse all of their passwords, but if you're not assuming that all of your personal identifiable information is already out there, then you run in danger of falling for this scam. And the other one I hear frequently is, well, I'm just not going to use my computer. I'm not going to go online to go do any of this stuff. Again, that doesn't prevent somebody from pretending to be you and going online. You really have very little choice in this at this stage, but to quite honestly be online and actively monitor this stuff, because otherwise you can fall into this group of victims that have their Social Security payments redirected. Again, Social Security is generally pretty good about fixing this once it's happened, but if you're on one of these payments, it makes up, in most people's cases, a massive portion of your overall income, and a single month's disruption that you have to go then clean up is just devastating.
Mike, have you ever put a fake license plate on your car in order to dodge a toll?
That seems like an extreme step to avoid a buck.
It does.
$2.
It does. Well, it depends on the toll. I mean, to get in and out of New York City, I think it's
20.
I want to say it's like $12 each way now.
Yeah, it could be.
Anyways, apparently you have a whole bunch of people that are doing things to try to avoid paying tolls, and not just like, oh, I'll go around so that I don't have to pay the toll like a normal human being, but they have bought license plate flippers for their cars where basically there's one plate on one side and another on another, and you press a button and it mechanically flips it, and then...
Which I'm seeing costs about $120.
You're seeing what?
It costs about $120. The license plate flipper.
Yeah.
Who are you, James Bond? Like, what are you doing?
Well, I guess here's the thing. It would seem to me that there's a couple things that you can do on this. The first is if you catch someone with a license plate flipper, they have another one that has like Venetian blinds that flap up and block the license plate.
Punishment needs to fit the crime here. I'm interested to see what you have.
I think that there should be, near every toll, there should be a little off-ramp with, when you get a rental car, the little spikes that come up?
Yep.
That drop down after you pay for the car?
Yeah.
I think that the police should escort you over to the side, run your car over a set of those little spikes, and then you're stuck there with 4 tires that don't work and you have to call for help because you tried to dodge a toll.
And a wrong license plate.
Yeah, I don't think there should be any additional fine or anything like that, but I just think the overall inconvenience and still cost of 4 new tires is way more than whatever the cost of the toll was, and you'll never do it again.
The funniest part...
It's safe, it's harmless, and you won't do it again.
The funniest part is in the animation of which shows a license plate blind thing, whatever you're referring to. Did you notice what kind of car it was? It's like a brand new Beamer.
Right.
And
you
the guy
got money
has
for
one.
The toll.
Yeah.
What a dope.
I would, my creative punishment was something along the lines of making, obviously if this happens, I think you should have to go and apply to get a new license plate and registration for your vehicle. But I think that this specific type of transaction should be immensely complicated, requiring you to basically spend a few days in the RMV. That would be my my hellacious punishment for this. Although I do like just popping your tires. It didn't really go directly to the crime in my personal view.
Okay,
you can make him get a special vanity plate as a punishment.
Just liar 1,
Dope.
liar 2.
No, don't even do that. Like make it a bumper sticker.
Yeah.
Something that looks horrible that you have to stick on your car.
Yeah.
But I also do like your idea, Mike. Maybe we could modify the RMV thing. Maybe it's like, okay, you got to spend like a whole night sleeping at the RMV. Like they give you a tent, and you have to sleep at the RMV.
Just make it like Naked and Afraid, but you're at the RV.
Yeah,
and you're clothed. I
21
don't want a
days.
bunch of naked people at the RMV.
Yeah,
Tucker.
it might be a problem. Yeah.
That's not what I'm going for.
You know what this ranks up there with me for? Do you remember a few years ago there was the story about somebody putting a model dummy in their passenger car and using the HOV lane?
Happens all the time.
Yeah.
Like this is in that same category for me. If you are blinding your license plate to avoid paying a $2 toll, I think you should be punished similarly to somebody that is putting a mannequin in their vehicle to use the HOV lane.
Yeah, I'm trying to think of other things that you could do, but I do like just, hey, near the toll there's a little, rest stop, and you get pulled over and you got to run over it, and you get all 4 tires popped, and then you got to call, AAA to come help you out.
If you haven't heard Chuck's other creative punishment when it comes to driving, if you're caught texting and driving, he's of the opinion that you should have to drive over your own phone.
Yes.
Yeah.
Yep.
Like that too.
You won't do it again. You will not text and drive again if forced to drive over your own phone. I'm not talking. I don't want to do anything cruel. I don't want to do anything mean. I just want to do something where
punishment fits the crime.
You understand? I'm not going to do this again.
Yeah.
They'll probably do that again, though.
Which one?
If they made you run over your phone, they'd probably do it again. Text again.
Then run over the phone again.
Yeah, just keep on going.
You should be like, okay, we're going to run over this phone again, and then we're going to run over your brand new one that you just bought.
Yeah.
And then you'll have to buy a third one because it's your second offense,
Yeah.
you see?
Yeah.
Then we're going to go to your house and run over your tablet on the 4th offense.
There you go.
I don't know. It's just like this is something that's just malicious. It's like, okay, there's a toll and everyone else is paying it, and you're trying to weasel out by having something that blocks your license plate.
It's less than a cup of coffee now.
Come on. You're driving an M5.
M7.
Whatever.
Yeah, at least be honest about it. Get off the highway, avoid the toll that way, and then get back on. Don't put a blinder on your license. Oh, my God.
We're going to take a quick break for the rest of the day, but we're going to be back at it tomorrow. So make sure you tune in. Remember, it is CPI Tuesday, bunch of inflation data and market reaction coming up tomorrow.